For more on Facebook, Dan Ives joins us, Managing Director for equity research company Wedbush Securities. Dan, good to see you. We talked about this not that long ago, and I think we were, I want to say, pretty spot on the issue of advertising. But what I'm surprised about is why is the market reacting so negatively on something that we already talked about, the street already knew things were going to be a little soft going into this number?
Yeah, look, I mean, we thought it was going to be soft. I mean, this was a train wreck quarter, much worse than anyone could have expected, and even worse when you compare Alphabet and even Snap from a digital advertising. So, and the problem is in terms of guidance, you feel like management, Zuckerberg and team just don't even have their arms around it. That's the worry. That's why the stock's selling off like it is.
I haven't seen a sell-off like this. I've seen earnings misses, and you have too. Last I checked, I think we were approaching the 20% mark. Forgive me, I don't have the exact number, but it was very, very bad. And it seems like everyone's going to throw in the towel tomorrow morning. All the analysts are going to cut their targets, going to cut their ratings. They'll probably go from buys to holds to sells, and just everyone throws it in. Is this fair to a company that just told you that things are going to be tough for a few quarters? Like, do we have to take the stock to the woodshed?
Well, the biggest problem is like, okay, you have Alphabet, Microsoft, there were rough patches and those stocks were down 6-7%. With Meta, you don't know what's on the other side of the mountain. Metaverse. They're going through a transformation. Zuckerberg does not exactly instill street confidence. That's the worry here, is that privacy issues from Apple, headwinds on social media, digital advertising, and they're essentially betting on Metaverse, which is 3 to 5 years out. So right now, it's really tough to be bullish on this, despite what's going to be a capitulation moment tomorrow.
See, we love talking to you because we can talk about these acronyms, right? So we look at ARPU, we look at the monthly active users or daily active users. All these numbers show how strong or how weak the company is, I guess, in its capsule right now. What did the numbers tell you about the quarter, and what does it say about us as consumers or users?
It shows consumers are using Facebook a lot less, Instagram a lot less. Engagement was off by about 8 to 10%. I think the worry here is that it's a perfect storm. You got TikTok, which is a meteoric rise. That's significantly impacting what you're seeing in terms of engagement, advertising dollars. And you're seeing less minutes, less hours spent on the platform. That's really the perfect storm that you don't want to hear as a company that bases on digital advertising.
Where is Facebook 6 months from now? Are we even going to talk about this company? I mean, they went from 0 to $1 million to sort of somewhere in between right now. But I feel like, remember the software company, is it Friendsters, where you had friends and we could chat with each other, and then there's a ton of companies in between. Almost none of them are around anymore. I mean, I'm not saying that's going to happen to Facebook here, but you have to ask the question.
I mean, I'd watch the movie Airplane from 1980 to get a sense of where Facebook's going. I mean, it's going to be some dark days ahead. I mean, of course, they're a survivor. They have billions of users. The biggest problem is that this stock could actually trade almost de-risk growth, saying that growth's not going to be there for another 2-3 years. That's the worry right now. I mean, this is really defining time for Zuckerberg in terms of where this company goes next.
The stock, as of right now, is down 60-some% from its high. If you tack on the additional 15-20% after hours, quick math says around 70 to 75% down from its high, right? Do you think it could go much lower, and if so, how much, and would you buy or sell the stock here?
Yeah, I wouldn't buy it. I think it could still go lower, just because you don't know where numbers go. It could be death by 1,000 cuts. That's the worry here. So you'll have a capitulation tomorrow and some bottom feeders in terms of looking to buy the stock. But I view this in a category of its own. I mean, look, this was a horror show, and the stock's going to reflect it.
Is this about Facebook, or do we need to worry about all these other companies that rely on digital advertising or some sort of monetization of their active users? Because the list is long on things that we're worried about right now.
Look, I think it's going to be a parting of the seas. I mean, you look at Snapchat, you look at Facebook, those are going to continue to be under massive headwinds. Alphabet, I think, navigating better, slightly better than maybe Fear in terms of YouTube and some others, which showed weakness. You're going to have softness in digital advertising. But let's be clear. I mean, Facebook or Meta, I view as its own separate disaster. Industry has headwinds, but nothing like what Facebook's seeing.
I speak to my kids. They are 11, 20, and they're young, right, compared to you and I. And none of them have used Facebook or they used it in the past, but none of them are actively on it. What does that tell us?
Demographically, I mean, okay, they have Instagram that goes after that market, but that's why TikTok has really been the game changer competitively, along with the Apple iOS privacy issues. That's been the 1-2 punch, which has been the perfect storm of headwinds that they're seeing.